stop. Before you swipe away, I need you to understand something. You are probably overpaying for insurance by at least 40%, and most of your policies won't even pay out when you need them. In 2025, the average American family wasted over $3,200 on premiums for coverage that has a 1 in 4 chance of being denied at claim time. That's not protection. That's a legalized gamble where the house always wins. And the worst part? You think you're being responsible. You think you're safe. But the insurance industry is designed to exploit your fear, not to protect you. Today, I'm going to show you exactly how they rig the system and how you can flip the table, keep more of your money, and actually get the coverage you deserve. Why is this topic critical right now? Because in 2026, insurance premiums are projected to rise another 12 to 18% across auto, home, and health lines, according to the National Association of Insurance Commissioners. Meanwhile, claim denial rates have hit a record high of 23% for health insurance and 18% for property claims. That means you're paying more for less. And with inflation still squeezing household budgets, the average family now spends over 8% of their income on insurance. If you don't understand the game, you're bleeding cash every single month. But here's the good news. Once you know the hidden rules, you can cut your premiums by half and boost your claim approval odds to over 90%. Think of insurance like a seatbelt that only works if you crash exactly at 45 miles per hour head-on into a concrete wall. It looks solid, but it's full of loopholes. Most policies are designed to protect the company, not you. So you're driving around feeling safe, but the moment you actually need that seatbelt to save your life, it disintegrates. That's the insurance industry's dirty secret. They sell you peace of mind, but the fine print is a maze of exclusions that let them deny you when you're most vulnerable. In this video, I'll show you how to read the map, avoid the traps, and build a seatbelt that actually works. 1. The deductible trap. Most people choose a low deductible thinking it saves them money, but it's actually the opposite. A $500 deductible on auto insurance can cost you $200 more per year in premiums than a $1,000 deductible. Over 5 years, that's $1,000 wasted. Statistically, you have a 1 in 10 chance of filing a claim in any given year, so you're paying extra for a benefit you likely won't use. Instead, raise your deductible to $2,000 and save up to 40% on premiums. Just make sure you have that cash in an emergency fund. Number 2, the bundling illusion. Insurance companies push bundling home and auto because it makes you think you're getting a discount. But the reality is that bundled policies often have lower coverage limits and higher exclusions. A 2025 study from Consumer Reports found that bundling saved only 8% on average, while buying separate policies from different insurers could save up to 25%. The trick is to shop each policy independently and negotiate. Use the threat of leaving to get better rates. 3. The hidden exclusions. Every standard homeowner's policy excludes flood, earthquake, and mold damage. Yet 60% of homeowners believe they're covered for these events. When a disaster strikes, they're left with nothing. The solution is simple. Buy standalone policies for high-risk events in your area. For example, flood insurance through FEMA costs about $700 per year, but can save you $100,000 in damage. Don't assume your policy covers anything. 4. The term versus whole life scam. Whole life insurance is sold as an investment, but it's a terrible one. The average annual return is only 1 to 3% compared to 10% for the S&P 500. Plus, you pay 5 to 10 times more in premiums than term life. For a 30-year-old, a $500,000 term policy costs about $25 per month, while whole life costs $250 per month. The difference invested in index funds would grow to over $500,000 by retirement. Term life is the only rational choice for 99% of people. Number 5, the loyalty penalty. Insurance companies punish loyal customers. A 2024 study by the Consumer Federation of America found that customers who stayed with the same insurer for 5 years paid 20% more than new customers. That's because they use algorithms to increase rates gradually, betting you won't switch. The fix is to shop your policy every year. Use comparison sites like Policy Genius or the Zebra and get quotes from at least 3 companies. A 15-minute call can save you $500 annually. Here's your one concrete step. Open your insurance app or log into your provider right now. Check your current deductible, your coverage limits, and your monthly premium. Then go to a comparison site and get 3 quotes. You will likely find a better deal. If you want to see the exact script I use to negotiate with insurance agents and save $1,200 per year, click the video on your screen right now. It's called How to Haggle Like a Billionaire. Don't let them keep your money. Take control